Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday. Hope you guys are doing fantastic. Well, rates finished the week worse than where they ended up last week. We had a ton of economic information that was released into the market, as well as the Federal Reserve meeting, so it was a bunch of data. And here's what happened. We saw consumer confidence come in lower than expected, along with pending home sales. That was also lower than expected. The PCE, the Fed's favorite gauge of inflation, it's a personal consumption's expenditure, that showed that inflation was under control and very tepid number. And we also saw personal income and spending also both down from what the market was expecting. On top of all that, we saw the GDP first quarter reading for 2015 come out, and expectations were for GDP to come in at about 1%. Well, the actual number was a big stinker. It fell far worse than expectations of only an increase of 0.2%, so way off the mark. Now, on top of all that, we did also have the Federal Reserve meeting. So with all this weak economic data, the Federal Reserve came out with their policy statement here on Wednesday, and there was no change to any short-term credit increases or decreases there. So as expected, there was no change there. But the Federal Reserve actually took off any mention to when they would increase rates in terms of the calendar. In previous Federal Reserve meetings, they had talked about maybe increasing in June or October or something like that. They took that off the board because the statement showed that they're concerned about that, and it was evident that the economy has been faltering a little bit. And so bottom line is that they're going to have to just wait and see, as we've been talking about, to increase credit may not even happen this year. So who knows what's going to be happening, and we'll keep you informed with that. But right now the Federal Reserve said that, right now taking any increase in credit off the table. Now, this typically would have been a good thing for interest rates. However, stock market really loved that news. Stock market is rallying today. Interest rates are under some pressure to move higher. So that's why we're seeing a little bit of a bump in interest rates right now, just because the stock market likes it so well. But I don't think this is going to be a long-term thing. Now, the other piece of information that I just wanted to let you know about was the Case-Shiller index that came in, and I'm going to go into a little bit greater detail. So the 20-city Case-Shiller index for February came out, and it showed, housing has been one of our bright spots. It showed that across the nation, prices have increased about 5%. But what's really interesting is Denver is number one in terms of the year-over-year number. Now, this was for February. In February, Denver showed a monthly increase of 1.4%. It was the second highest number. We were only second to San Francisco, showing an increase of 2%, but none of the other 20 cities were even over 1%. That's a pretty high number, 1.4% for Denver. That's almost 16.8% if you'll annualize that out. Now, the month or the year-over-year number, we were number one at a 10% increase. So, this real estate market is pretty tight, and we all know that, and it's causing prices to go up. But what's happening, I'm not sure if you're seeing our customers getting discouraged with having to put in multiple offers and having to compete, but show them this chart, and I've included a link to this chart so you can show it to your clients, and it's at a link up above. But explain these numbers to them and let them know that don't get discouraged. Keep after it. Anything good is worth putting the time and effort and energy into it. And if you're having to pay over list price, which most people have, and you're going to have to, compete with multiple buyers, and you're going to have to, it's going to be a really tight market, but don't get discouraged because it's going to pay off for you. If you take a look at these numbers, if this continues, and we typically know that the summer months are usually the best months in terms of appreciation, and this was February's numbers, there's going to be a pot of gold at the end of that rainbow there for them, because they're going to be able to, if they keep at it, they will get a house, and they'll get to enjoy that appreciation that Denver is experiencing, because there's really right now not a whole lot of end in sight with low rates, low inventory. So don't let your customers get discouraged. Show them these numbers. Show them how much a 10 or 15% increase in purchase price when they're owning their home really equates to, and how much money that they're going to be putting in their pocket, in essence, because now they are the recipient of that appreciation. And don't get discouraged. Keep at it. All right? If you have any questions, please give me a call. I hope you have a very wonderful weekend. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.